Hello, everyone. Thanks so much for joining us for this very special webinar. We do a monthly webinar, but when we have Rod Griffin from Experian, we always have a great registration, a great turnout, and a great webinar. So Rod is Director of Public Education for Experian, which is a consumer, what's the word I want, Rod? CSA.
Consumer Credit Reporting Agency, credit reporting company, among other things.
Among other things that he will tell you all about in a few minutes. Thank you. That was Rod, our guest speaker. So how Experian Boost may help clients improve their credit scores. Very important information for all of us in the helping fields. So let's go ahead. Okay, do some housekeeping. Well, we have all kinds of things going on. People calling, phones ringing. Okay, so I want you to know that this recording will be on our website, on our Facebook page, and our YouTube channel by next week. You have a question box in that rectangle up in the right-hand corner. You can enter the questions during the session, and we will answer all of them at the end. We will not be sharing the slides though because they are proprietary. So because we always have at least a quarter of our registrants new to financial social work, I just want to go through a few of the basics before I turn it over to Rod. So we believe that financial health is about much more than dollars and cents and even budgets. Let me explain why. This is how we look at our work here at the Center for Financial Social Work. We know that there's so much involved in our financial lives and our financial behavior. If you start up at the right-hand corner here, there is self, and we will be talking about how this is all about money and self. It depends on where you are in your life cycle. The other people in your lives, we're very often not aware of how they influence, but I promise you that they do. Then there's our own physical, psychological, emotional, and mental health. And our behavior, which I will share with you in a moment, because behavior, how we earn, spend, save, share, and borrow, that's our financial behavior. And there's so much going on around how we deal with those components. And of course, technology plays such a serious and important role. And you see up there under money, earn, spend, save, share, borrow. And society, social media, all of the messages we receive in the course of the day. So this is what we call the Wolfson whole person financial health model. Understanding that the foundation for financial well-being, financial health revolves around so much more than dollars, cents, and budgets. Okay, what is this? We do not. Remind me tomorrow would be very good. Thank you very much. Okay, can we move past here? So this is our financial social work model of financial wellness. We believe that it's a person's relationship with money and self, which drives financial behavior, and that's what determines financial circumstances. And right here, where my little twisty arrow is, it's showing you where financial behavioral change happens. And until and unless behavior changes, really nothing changes. So when we talk about the relationship with your money and with yourself, all of these pieces of self-respect, self-esteem, self-worth, they are very important components of how we address our finances. And I'm hopeful that by the time we finish the slide, you will know that financial behavior means how we earn, spend, save, share, and borrow. And there's a very strong connection between money and self. And there are so many emotional barriers that we all face. The fear, the guilt, the worry, we're embarrassed, we don't know how to talk about it, we don't know the terminology, and we still don't talk about money. We'll talk about sex before we talk about money. Me, I'm always talking about money. So a brief overview of our model. It's ongoing, highly experiential. It is a behavioral model incorporating education, motivation, validation, and support. It is interactive, introspective, and strength-based. It works individually or with groups, and many of our graduates use it to practice financial therapy. It incorporates transformational learning and the trans theoretical model of behavioral change. Again, it's our approach to financial well-being. So when I talk about that, it's about more than dollars, cents, and budgets. It's because dollars and cents don't make financial choices. They don't jump out of our wallets and decide where they're going. We are the ones that choose and make those decisions. It's our inner money self. And we each have an inner money self. And if we had more time, I would ask you to close your eyes and introduce yourself to your inner money self. It's very important because financial circumstances originate from within your inner money self. Your inner money self includes your thoughts, feelings, and actions with your money and with yourself. That is the psychosocial component of financial social work. It's those thoughts, feelings, and actions that determine so much of our finances. Financial well-being requires a healthy inner money self because someone with a healthier money self engages more readily, is more hopeful, is more eager to change, and more prepared to succeed. So our goal is helping men and women make peace with their money. So one important piece of that goal is our credit score, helping clients understand the importance and relevance and role of a credit score. So I'm going to turn this over to Rod Griffin now. And Rod is going to give you some great information and updates that we'll all benefit from. Rod? There
so, you go. We're getting going. If everything works like it's supposed to, and we did test this yesterday and it did, so we'll see how this works. Yeah. I want to.
You have your second screen. Do you see that, Rod?
We're getting there.
There.
Does that look better?
Yeah, it looks
okay. So we just had to get set up. So thank you all. Rita, thanks for having me and for all the great work you do and for everyone being here. Just a bit more by way of background. I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian, and most of you know us as one of the big three national credit reporting companies. We actually are the world's largest information services provider, so we have a number of other businesses. If you're going to buy a used car, for example, you can get an auto history report from Experian. We were the provider of the National Auto Dealers Association report, preferred over that other company that we compete with. We have information used for business marketing, for fraud and identity protection and recovery, for to help healthcare providers manage their cash flow and billing cycle tools, things like that. So if it's information related, we're probably involved. But today we're going to talk about credit reporting and credit scoring specifically. And it's been an amazing last couple of years in the credit reporting industry. There's been more change than I think I've ever seen in such a short time. And I've been with Experian now for a little over 22 years. So with 2 decades, it's usually changing at sort of a snail's pace. But over the last year or so, there have been some significant changes in credit reporting and credit scoring. So I wanted to take a look at what's been improved in our view and what we're doing to help people engage with us more effectively. Some things that have changed in the credit report, in the credit reporting process, information that's actually been removed from credit reports, and then some things that have been added to the credit history, particularly Experian Boost, which some of you may already have heard about, but want to provide more information so that you can understand it maybe a little better, know what it's about and how to use it as a consumer to actually help boost your credit scores. And it may be the most exciting thing I've seen in our industry ever, because it actually puts control of information going into the credit report into your hands as an individual consumer. So that's never been done before, and we'll talk more about that. So I also want to allow plenty of time for questions and answers, whether it's about what we talk about on the presentation today or just general credit reporting information and things about credit scores, fraud and identity theft. I'm always happy to talk about those kinds of issues as well and answer any questions you have there. I want to make sure I answer your questions. As I said, I've been in corporate America for 2 decades, so they train us to do death by PowerPoint, and I don't want to do that. So try not to. I'd rather have the conversation. But just to jump in, so what's been improved in credit reporting over the last 2 years or so? There've been a number of changes resulting from what we call our National Consumer Assistance Plan, and it's been industry-wide, as well as some things Experian's done itself independently. Perhaps the most noticeable, if you're working with us, is that we at Experian have introduced a much more simplified, clear online dispute process. So if you need to dispute information in your credit report, get your credit report once every 12 months at annualcreditreport.com, for example, or if you've applied for credit, didn't get the best rates, or you've subscribed to a monitoring service from Experian, you can get your reports. We've made it really simple to go into our online system, go to experian.com/dispute, and you can enter that report number. If you don't have one of those reports already that's current, we'll ask you for some identifying information and we'll give you a free report. So you can automatically get another free report in addition to the annual credit report and others that you would qualify for under the law. So it's a free report. And we've created really a shopping cart process. You know, it used to be you'd write a letter, you'd provide documentation with that letter, you would mail it to Experian with an envelope that said Experian. It would take a week to get to us. Who knows who could have possibly looked at that letter? Still may need to mail occasionally, but you can do that through certified mail. That's extremely rare now. If you go online into our dispute process, again, experian.com/dispute, get that free report with each account entry, identifier, every element in the report. There's a button that says I need to dispute this. You simply click that button and it will walk you through that process for that particular account or item that's in the report, and we'll help you walk through that as well. We'll provide education information as you go through, explaining what that information is, how it works, what comes from, what it represents, and include dispute types that are the most common, as well as allow you to enter your own. But you know, if it's not your account, if it's fraudulent, if it's never been late, all you have to do is click the button. We'll enter that dispute. When you've completed all of the things in the report you need to dispute, they all go into sort of a shopping cart, and you hit submit. And then that goes into our dispute process automatically. We transmit that information to the appropriate sources of the information, and then they're able to process those disputes appropriately. It's much more secure. It's much faster. You get a tracking mechanism. So, you know, people say, well, you need a paper trail. We don't need the paper to have the trail now because we provide documentation, verification of the disputes. and you'll get an update when those disputes are completed, telling you what's been done. So it's much faster. If you have documentation you need to send with the disputes, you can upload them directly as part of that process. You just click the upload link and you can attach your documents, and we send every single paragraph, sentence, word, punctuation mark to the source of the information to include in their dispute process. So it's much faster, it's much more secure, much easier to do. So we've really worked hard at helping people connect with us and making sure that we can get the information corrected if it needs to be, so that we ensure you benefit from the accurate information as well as businesses. We want that information to be accurate, so we see it as a benefit to everybody, and really simplified that process. There have also been a number of changes in the way credit scores are treated, particularly around collection accounts and that information in a credit report. FICO, Vantage Score, and others now actually will weigh medical collections less heavily in the score, so they won't have as big an impact. I think that's a significant improvement or change for consumers, because medical debt is largely beyond their control in most cases, and it really is a financial barrier. If it's a legitimate debt, still affects your ability to repay, so they should be part of the report, but the impact on borrowing or lending decisions, depending on which side of the equation you're on, they're less impactful. And as they age or on the credit report longer, they have even less effect. So medical collections are less severe in terms of scores than they used to be. We think that's a significant change. When you pay a collection today, once it's updated, show paid in full, the newest scoring systems from FICO, so what they call FICO 8 or FICO 9, and the newest scores from Vantage Score, so 3.0 and 4.0, which are the most common scoring systems used by lenders, particularly FICO 8. A paid collection is now excluded from the calculation. So we used to say if you paid a collection, it doesn't immediately help you, so it would still be on the credit report, still showed as paid. But today, actually paying a collection could result in an immediate improvement in your credit scores, because of the way the market shifted and the way people manage their credit. They no longer are being treated the same way by scoring systems. So you would see them in the credit report, see that paid status, and your credit scores could improve right away. Paid collections still do have less effect on older scoring systems as well. And so as they get older, your scores will get better. That's always important to remember, that they're not going to just continuously affect your scores negatively, and they will come off. But as they get older, they have less effect. The new scores, though, really kind of remarkably, if you pay that collection account, they no longer affect that score. So you can increase your credit scores right away by paying off any collections you have. So that's very new, and we think a significant improvement. So what's changed? And a lot of things have changed. We'll talk about fraud alerts and file freezing in particular. Fraud alerts are now initial alerts. So what we call initial fraud alerts are on your report now for a full 12 months. They used to remain only for 90 days. And the initial alert says, I may be a victim of identity theft. Before granting credit my name, please verify my identity or call me, and you can provide a telephone number. As I said, that was 90 days. That now lasts a full 12 months. Lenders must respond to those alerts, and that changed when the FACT Act was enacted. So the law that gave people the right to a free report once every 12 months actually probably was more impactful from our industry perspective, in that it required lenders to honor and respond to initial alerts. They can't ignore them, and victim statements as well. So extended that time frame to give you some additional protections. Credit freezes are now available nationwide at no cost, and that includes placing the freeze and then subsequently lifting and restoring it. So there's no cost to freeze a credit file. We'll issue that PIN number to you. When you come back to us and say, I'm going to apply for a credit, I need to lift my freeze, provide that PIN number, we'll lift the freeze at no cost. You can tell us, I want to lift it permanently, or I want to lift it for a certain period of time, or even I want to lift it for a certain lender. And once that time frame ends, or you come back to us and say, I need to put it back, we'll put it back at no cost as well. So there's no cost to freeze. The caution I always give around freezes is that you need to make sure of a couple of things. One, you need to understand what a freeze does and does not do. A credit freeze will not prevent identity theft. Yeah, but I hear that said often, that you need to freeze your report to prevent identity theft. It does not do that. A freeze doesn't prevent someone from hacking into a database. A freeze doesn't prevent someone from stealing a computer. It doesn't prevent a methamphetamine addict from going through trash and taping together your billing statements and getting your identity, which remarkably was what a sheriff in the state of Washington once told me one of their major issue was within the last couple of years, is apparently if you're a methamphetamine addict, perhaps the one the one benefit, if there's such a thing, is that it gives you tremendous focus and you don't sleep much. And they are taking things out of the trash that have been shredded and taping them back together to get identities so they can gain access to cash and bank systems and feed that habit, which is really sad, but huge problem. So freezes don't prevent that from happening. They only are triggered in the event that someone uses a stolen identity to apply for new credit. So if someone applies for credit, we'll get an inquiry as a result, and that freeze will tell the lender the file's frozen, it needs to be lifted before we allow access. And once you've provided the PIN number, we'll lift that freeze and you can continue the application process. But in terms of preventing identity theft, it doesn't. So my concern is always that people will feel like I've frozen my file so I don't have to worry about identity theft, and that's not the case. With identity theft, thieves are doing lots of new things. Rita and I were just talking earlier about the fact that I was at a conference where police officers were explaining that the way they steal expensive new cars now is they go to a lender with a stolen identity, or a dealership with a stolen identity, use that identity to gain financing, or it's a buy here, pay here, or through a lender who doesn't then check the report properly and then drive away. And so they create false identities. So a freeze wouldn't necessarily help there. I always tell people, honestly, I was a victim of identity theft. My stolen identity was used to file a tax return a couple of years ago, and that wouldn't have triggered a credit freeze because it doesn't involve checking a credit report. And I found out that I was a victim because I got a check for $6,000 in the mail from the IRS and then realized I hadn't filed my taxes yet. So had to respond to that and resolve that issue. So it's a long way to say, just be sure you understand what a freeze does and doesn't do, and understand that before you apply for credit, you have to lift it. And that sounds easier said than done, perhaps, especially if you're not active in the credit marketplace and you realize you need to apply and forget what you did with your PIN number or what it is, and then it can take time to get it reissued. The good news, though, is that with freezes today, it's almost instantaneous. We used to take up to 3 days because it was very manual. That's now changed. It usually only takes a few minutes to lift a freeze and then replace it as well. We recommend you allow some time just to be sure that you have your PIN number, that there aren't any issues in lifting it, just to ensure that you don't delay that application process. So a lot about freezes, but the primary thing is they're available nationwide. The other thing that is now possible with credit freezes is if you have a minor child, you can contact Experian or the other credit bureaus and freeze their credit files. If they do not exist, we will create a credit file for the minor and place that freeze. Again, with some caution, I'm not sure that's the best approach. If there's no credit file there, if someone uses that child's identity, we're going to notify the lender there's no credit history on file, and that will stop the transaction. If you're creating something so you have to protect it, that may or may not be the ideal situation. The other issue is we will issue a PIN number. As a parent, you need to make sure you protect that PIN number, know where it is, and when that child turns 18, make sure you give it to them so that they can request their own report and lift that freeze. So if you're freezing a file for a minor child who's 3 or 4 or 5 years old, 12, 14 years down the line, make sure you know where that PIN number is, because you might not have checked the report in that period of time. So we will do that and create the file for them. We've also introduced at Experian what we call a credit lock. It's like a freeze, except that it's part of our premium credit monitoring service. So if you subscribe to CreditWorks or IdentityWorks from Experian, you can use your cell phone to lock your file at Experian or unlock it. And it's a button on the cell phone screen. So it's a convenience. Very much like a freeze, works in very much the same way, but it's a premium edition and the ability to lock with an app and unlock with an app and do so wherever you might be. And so that's, if you hear lock, credit lock versus credit freeze, that's the difference. So I wanted to make sure you're aware of that as well. And what's come off of a credit report? And it's really interesting that, to me anyway, that we're starting to see changes in credit reporting based on how people are now using credit and what is no longer necessarily indicative of risk. And that's what credit reports are really all about. What represents risk and what does not. And we, as of about a year ago, removed all public records from a credit report with the exception of bankruptcy. So you will no longer see civil judgments. It used to be that if you were sued and you lost, you owed a debt to the court, that would then appear in your credit report, that civil judgment. And we no longer include those. We no longer include unpaid tax liens. Ironically, unpaid tax liens used to remain longer than anything else in the credit report. They used to stay in a credit report for 15 years. And then that was reduced to 10 years. Now they're not part of the credit report at all. Same thing true for paid tax liens. They're no longer part of the credit report. I like to mention the last two, just because they kind of make me smile a little bit. Parking tickets are no longer part of a credit report, and that's been a number of years. For some reason, if you lived in San Diego, I used to get calls from people upset about parking tickets being in their credit report. I don't know why, but that seemed to be a big one. You won't see those anymore. And library fines actually used to be part of a credit report 10 or 12 years ago. They stopped being reported. So if you didn't pay for your books, they could be on your credit report. That's no longer the case and hasn't been for a long time. They were sort of the first to come off. And as I said, there are a number of reasons for that. One, they represent a very small percentage of the consuming public, so people with credit reports. And so they weren't very predictive of risk as a whole. We've also seen that they didn't predict as much risk in the current market as they used to for a person who did have public records. And the other issue was that in order to report things like civil judgments, we had to work with local courts, so county courts, for example, municipal courts. And it was very difficult to ensure that they were updating their records and reporting them to us in a timely manner and to process disputes. And so from a compliance perspective, in order to comply with the dispute requirements of the Fair Credit Reporting Act, it was also very difficult. And so rather than have information that wasn't updated properly, we've simply removed it as an industry from your credit reports. You won't see them on any of the credit reports today. However, and there's always the but part of the question. It's gone, but there are organizations like LexisNexis, for example, that's not a credit reporting company, but they are collecting those civil judgments and other information. So if a lender chooses to, they could get a report from those organizations and still see that information. So it's not that it's gone from the decision-making universe, but it's not part of a credit report anymore. And what's been added, and this is perhaps to me the most exciting thing that's happened in credit reporting in many years. If you haven't heard of Boost, check it out, Experian Boost. If you go to experian.com/boostamerica, you can learn more about it. The thing that's really interesting is it's not really what we're adding as a credit bureau, it's what you can have us add as a consumer. Experian Boost allows you to give us permission to add your utility payments to things like electricity or natural gas or water bills, your telecommunications bills, so cellular telephone bills to your credit report. Cable television bills even could be included in your credit history to help boost your credit scores. You give us permission to do that, and it's the first time it's ever been done. It's the first time we've ever enabled people to access or to give us permission to provide credit reports or provide credit report information to us and give you control. And that's something that Experian, we're very committed to. You can talk to our CEO and our leadership, and they'll tell you our emphasis is on financial inclusion. How do we help people who deserve access to traditional low-cost credit and financial resources gain that access if the current system doesn't enable it? So what can we do to demonstrate that a person is a good credit risk if they have a short credit history, what we call a thin file, of less than, say, 5 accounts in the credit history, or their scores are 680 or below in particular, but they're still doing all the right things. They may have 1 or 2 accounts, a short history. It's not that they're a bad risk, it's just that there's not enough information there to show that they are a good risk. And by giving people control of that information, being able to add your positive cell phone payments, your positive utility payments can help you boost your credit scores. And it's an option you have complete control. It really creates a new level of control for you as the consumer. And I always hate these cliche statements, and I try to avoid them, but I haven't been able to get away from this because I think it's true. It's a game-changing proposition for Experian and you as a consumer. It changes what we've done completely. Our competitors are trying to figure out how to catch up, and they've said so. You know, it really giving people control to add positive information, and that's the other key. It's positive information, no negative information. So it's not going to hurt your credit history. Gives you control of that information. And what happens is to boost, and you could do it right now if you're on a cell phone. You could go into Experian.com/boost or Experian.com/boostamerica. Follow the instructions. We'll give you a free membership. It's all free, no cost at all. And once you start walking through that process, you'll give us consent or your permission to access online bank accounts, so savings account, checking accounts primarily, through which you pay your utility bills or your cell phone bills or your cable television bills. And we will then be able to go out to your bank with your permission, find those payments, and then pull those payments into your credit report once a month. We will give you a FICO 8 score at the beginning of that process. So you'll see where you stand. Once you've boosted your score, you'll get a new FICO 8 score. You'll be able to see what your change is and how much your score has been boosted through Experian Boost. And it's a real-time recalculation. So it's actually showing what's gone into the credit report and what's happened with your score. And as I said, it's a FICO 8 score, which is the most commonly used score in the industry at this point. If you decide you don't want us to do that, you can tell us stop, we'll stop. So you can withdraw from the program at any time, and we'll remove the information from the credit report. So gives you complete control over that information. What we're seeing is that for most people, there's an increase of between 10 and, well, more than 10 points. I've seen as much as 30 points from someone who was doing it. Most of the time it's 10, 12, 15 points, something like that, which is not small. After the housing crisis, we saw scores on average drop substantially, and it took about 10 years for scores on average to increase 6 points from where they were, and now about 10 to get back to where they are, or where they were prior to the housing and mortgage market crash. With Boost, you can see that kind of increase in minutes. So really a powerful tool. And we are encouraging people to give it a try. We want to know how it goes. It gives you what we call trades or accounts in your credit history so that you have better scores. As I said, we're seeing 2 out of 3 or 2/3 of people are seeing instant improvement. Up to 15% are seeing improvements in band. So what that means is if you have a score that would qualify you for one rate and you boost, you may qualify for a better rate. So 15% of the time we're seeing that. It's free, as I said, for everyone. There's no sales pitch there, and empowers you as a consumer to benefit from your own information. In part, we've done this around utilities and cell phones because those are state regulated, and in many states they, for some reason, prohibit reporting positive payment information. They can report the negative information, so if you don't pay, you might see a collection account for your cell phone, for example, but you wouldn't see the on-time payments. So we're actually giving people credit for the very first time for doing the right thing and making those payments on time and being responsible. And that, to me, in my work, is really exciting because we've never done that before. We're doing something that's completely anomalous to most of the people I work with. The question is, you're going to let people tell us what to put in the report. It's going to be positive information. The thing we have to make sure we explain is that from a lender's perspective, it doesn't allow people to falsely increase their scores. So if you have poor scores because you haven't been paying your bills on time, you have collection accounts, you've gone into bankruptcy, you're not going to see your scores increase significantly. But for those who have been building credit, if you're young, new to credit, a new immigrant to the country and building credit for the first time, if you're establishing credit after you've had some problems and you've turned things around and you're doing the right things, those are the people we're going to see benefit. But if you're not doing the right things, it's not going to help you. We're not artificially increasing scores in a way that would reduce their predictiveness, but it does put you in control. So that's what Experian Boost is all about. It's about giving people control and empowering you as individuals to improve your credit histories and boost your credit scores. And hope you will all try it and let us know how that goes. Tell Rita to let me know if you have issues, those sorts of things, and we want to know about those too, because it's an experiment for us as well. And we're learning where there might be glitches and where there might be things that are confusing as people go through the process, that sort of thing. But it's live and available to everyone. And with that, I'll stop talking, Rita, and turn it back over to you and answer any questions anybody might have.
I think I see a lot of questions. We're going to find.
How do I give you the screen back? That's what I'm trying to
You already did, I believe.
I did. You took it away from me. Okay.
Yes, I think so. Hold on. I'll change presenter. Make another attendee. Maybe I didn't. Okay, let's find it. Can you see my screen?
I see. I'm still looking at Rod's screen.
That's not good. Rod, go up into the right-hand corner where it says change presenter.
Where is that?
In the rectangle in the upper right-hand corner. I'm not seeing it myself. Change presenter. Cannot. Okay. Okay.
Make it Vonda.
We got it. Can you see me now?
Right. I see you now.
Okay.
Your screen is up, Rita.
Yay.
Yep, we're good.
Okay.
Not that you couldn't just keep looking at my screen. They're just not very interesting. So.
Oh, I have some questions myself, but we're gonna, before we go to Q&A, I just want to tell everyone that we have our certification, and it is, our students have 6 months to complete it, and there is an online final exam that's, our students have 2 weeks to finish. It is self-study and self-paced and includes 20 CEUs from the National Association of Social Work. And those are the 5 workbooks. There is a payment plan, and our graduates are able to use all the certification materials one-on-one with their clients. Then I want to make sure that our attendees know that our webinar next month is on addressing the challenges of money and mental health. There are many, unfortunately, and they are important. and very relevant to the work we do in the helping professions. And then in July, we have Parents Under Pressure, Advocating for Children with Special Needs. And that's the title of a book that our presenter just had come out. And we will be giving away one free copy. So, Vonda, do you think you can feed us some questions? Or do you want me to?
Oh, it doesn't matter. And there's quite a few.
I thought so.
Um,
Okay. Let everybody enjoy your voice for a while.
let's see. I am going to try to start from the top, Rod. So,
Okay.
and so here's one that said, oops. Every time someone feeds a question, it pulls me down.
Moves. Right.
Yep. Do it really quick. When annualcreditreport.com doesn't work for someone with a common name, what do you suggest? This happens often to my clients.
Yeah, and the reason that happens is we're not sufficiently matching to be comfortable providing the report. So we're concerned that there may be fraud or going on. So you should receive instructions to write to us. That's one of the instances where we would require that. And just follow those instructions. It'll ask you to provide some documentation, a utility bill with your name, a copy of a driver's license, something like that, so that we can verify you are who you say you are. And that's us acting in an abundance of caution in most cases, particularly for a common name. So there's not a quick answer other than, that's what's happening in almost every case, and we want to make sure we have the right person. So it's going to be a matter of writing. We haven't found a better way around that yet, to make sure we can verify your identity.
The Social Security number doesn't help, Rod?
No, and the reason is we don't have access to Social Security Administration records. So when you provide a Social Security number, we're matching them to all of the Social Security numbers that have been reported to us. So if you have, a dozen lenders and 11 of them provide one Social Security number and the 12th one provides a different one, we'll include all of those on the report. What that tells us is you provided a certain social, it matches those 11, so it's probably the right one, so it helps us as an identification tool, an identifier, but it doesn't really verify identity. So, and that's a common misperception. We don't just match to the social, we match to everything that's provided to us.
Great, okay.
So paid collections are no longer calculated in the score. That's a question.
With the newest scores, that's true. So once it's reported as paid to us and it shows paid in the credit report, the newest scores from FICO and from VantageScore would no longer include them. So they wouldn't be there anymore.
Okay. And I'm gonna read for the most part, go down the line, but there's quite a few, so I might skip around.
Go ahead.
Here's a question that says, so if civil judgments, unpaid tax liens, etc., show up, we are to send in disputes and just ask them to be removed?
Yes, dispute them, and we should take them off the report.
Wow, okay. Is Boost available across the board with all credit bureaus, or is it exclusive to Experian?
It is exclusive to Experian at this point, so just your Experian credit report. Most lenders use Experian, so it would affect those scores. If you're working with a lender who doesn't, tell them they need to call us. We would love to have them using our reports. So, but yeah, that's just Experian at this point.
Okay, thank you. How does Experian know that you are paying the bills on time?
We don't. I mean, what we're seeing is it's not that we're getting that payment from the utility company. So we're looking at your information. You say, check my credit report. We go in and find the name of the utility company and that payment each month, which tells us you're making those payments. And so you've made that payment, it comes into the credit report. If we don't see a payment for a month, we will not update the report. If we don't see payments for 3 months, we'll remove that information from the report. So it's about making that payment consistently. And that's what that's showing us.
Okay. Let's see. Does settling a collection for less than the full amount impact the score differently than paying full?
If it's, if you settle an account, a credit account, it will be reported as settled in the report. Settled means you did not fulfill the terms of that contract in full. That's negative. It's going to hurt credit scores. So if it's reported as settled, it will have a negative effect on your scores. Yes.
Okay. I think you answered this, but I'll ask. If someone pays the bills by cash or money order or debit card, can they still get Experian Boost? Does it only work for people who have checking or savings accounts?
Right now, it has to be paid through what we call a DDA, a kind of demand deposit account. So checking account and savings account, money market account that you would have with the bank, because we have to be able to go into that account each month and find that that payment that's from that to that particular company, utility provider, cell phone provider. And yeah, I don't know if I stress this, but we're not looking at your entire checking account. We're just going in through an organization that's called Finicity. So it's a partner in the process, and they go through and they find it, and then they encrypt it, and then they give it a token. So we never actually, it keeps it very secure. So it's encrypted and tokenized as it comes through the process. So it's very secure. And they tell us, here's the payment for the month, and it comes into the credit report. So that's kind of how the process works, but it does at this point have to be paid through a checking account. And I had that same problem. I tried to boost, and my CEO asked me if in the cafeteria at the headquarters one day, came up behind me and said, "Rod, have you boosted yet?" And I went, "Well, I tried." He said, "What do you mean you tried?" I said, "Well, I don't pay it through with two issues. One, I didn't pay it. I pay it with a credit card and then pay the credit card, so I get points. And the other issue is my bank wasn't listed in the list of about 1,200. That list is growing, but I have a small regional bank that wasn't part of that first list, so that's increasing too. So if your bank's not there, give it time."
Okay, thank you. What services of yours are free versus paid for by the consumer? Ultimately, it seems unfair that consumers must pay for credit monitoring when it is their data, and the cost should be the responsibility of the users of FICO information to make lending and related decisions. So there's a question, I guess, and a comment in there.
Yeah, and it's interesting to look at, and it's an interesting discussion. I will tell you this: 80% of our revenues are from banks and businesses, so they pay heavily for our services. From a consumer perspective, you have free access to all of our information. So credit reports, you can see, you get free once every 12 months. You get a free report if you're unemployed seeking employment. You get free reports, multiple reports if you're potentially a victim of fraud or are a victim. You get free reports if you're declined or have adverse action taken. So you can see those. Monitoring services generally are free today because of breaches. Not a good reason, but
Right.
if you get offered a free service, I recommend you take it. Otherwise, you can pay for those services, and people tell us that they find value in that, and do pay for monitoring services and access to their reports. If you're buying a house, for example, and they're working on their scores, we provide not only reports and scores, but it's the other information that you get with a monitoring service like CreditWorks that provides loan calculators, payoff calculators, score simulators, so you can see what's happening with your score if you do certain things. So it's that added value that you really pay for, because you don't have to pay for a credit report anymore. That said, there's another way to think about the information we maintain, and I ask you to entertain this thought. You don't have to agree, and I wouldn't ask that, but my analogy is this: if you have a house and you have a neighbor on each side, so one to the left and one to the right, and bear with me on this. And the neighbor to your left comes over and says, can I borrow your lawnmower? I need to mow my lawn. And you say, oh, sure, and you loan him the lawnmower. And 3 weeks later, you don't have the lawnmower back, so you have to go over and say, hey, I need my lawnmower. He says, well, I don't have it ready for you just yet. So then you go back again and you say, where's my lawnmower? And you finally have to go get it from him. And when you get it, it's broken and he doesn't compensate it for you. And a day or two later, the neighbor to your right comes over and says, hey, the guy to your left says he wants to borrow my lawnmower. Should I loan it to him? Under the notion that the information in a credit report belongs to you as a consumer, that would mean you couldn't tell him no because he tore up my lawnmower. The question is, whose information does that belong to? He borrowed a lawnmower from you, so is it your information about how he treated that that object that he borrowed, or is it his information about how he returned it? So thinking about the lawnmower analogy, lenders loan money to you, and they're telling us how you repaid their money. So is it their information about how you repaid those debts, or is it your information about how you did or did not repay the money you borrowed? You know, and the reality is with banks, it's our money that they're loaning that you've deposited. So is it your information, or is it information about how you repaid their money? Just another way to think about it. And that's kind of my perspective. It's a bank's information. We need identifying information to match that to you. If you don't have credit reports or scores, you're going to pay a lot more for credit. You're going to pay a lot more for access to financial tools. You won't have the tools that are there to help, that are now used, especially to protect from fraud and identity theft and to help people recover from fraud and identity theft. I mean, you think about when there's a breach, who do they say to call? And it's always the credit bureau and nobody else. So we're part of the solution in my perspective. So different ways to think about things.
Okay, thank you. Do medical collections have the same impact at the other two CRAs, credit reporting agencies?
Yeah, yes, yeah, credit reporting agencies. So we store the information that's reported to us. The scoring companies like FICO determine what that means to the score. So if a FICO 8 score is used and it's calculated using the information from Experian, and we have an account that says, you know, there's a medical collection and it's paid, it would be excluded from the score. If that account were on Equifax's report and it showed paid, same thing would happen because it pulls that information in and the score treats it the same. So it's not actually our decision.
What are the issues that Experian is concerned about? The ones that you're lobbying Congress/state legislatures. Are there any issues that social workers can support?
Yeah, I mean, I think there are a lot of things that we agree on. You know, we would, things like, you know, what was the cause for boost? We think there are data resources and tools that would benefit people. So we're always looking at alternative kinds of data, you know, that would help people and being able to report that information. Things around credit repair and illicit credit repair that cost people millions of dollars a year and do them absolutely no good, but they're, you know, the Credit Repair Organizations Act actually prohibits us from giving credit advice, for example, at the Bureau, which seems odd because we know about it, but the credit repair firms are out telling people, if you pay me $700, I'll remove that information from your report even though it's accurate, and they disappear with people's money. So enforcement of that kind of law, you know, how do we address illicit credit repair and make sure we're working together to provide services that are beneficial to consumers and not predatory. Predatory lending issues, you know, can we use information? Curious thing, I think it's really interesting. Things like payday loans, they're predatory. But if we're able to report on-time payday lending accounts, which we have some things we're working on to figure out how we might do that, could it help show a person's a good credit risk and therefore qualify them for lower cost credit, other financial tools, and use it kind of to turn that on its head, and to help people if we're able to report that information. Things of that sort. A consistent data protection laws. When you have 50 states and everybody's different, it gets to be a really big challenge to enforce them and to know what the expectations are and what can be done, and how we need to do things. So, things like that, I think we certainly may have some agreement on.
Rita, do I have time for one or two more?
Rod, does she have time for one or two more?
Sure.
There's a lot of great questions. That was a great question. And anything you can do to change payday loans or make them less horrific than they are would certainly be something we can all support, especially me and Vonda.
Absolutely. Totally on board with that one. Okay, so here's one. If a customer signs up for Experian for all the new bells and whistles, but the other reporting agencies do not have the new format. Let's see. I'm going to a tri-merge report. While having the benefit of the Experian score, will still have assumably a lower score from the other agencies. Thus, the score will have only changed minimally when tri-merge is pulled.
Well, if they're pulling a tri-merge and consolidating the reports, that information would be included and it would affect a FICO 8 score, for example. So you would see it improve, potentially. If they're only looking at reports independently, you would only see the change in your Experian report. That doesn't mean it won't help the decision, though, from the lender. So, that's something to keep in mind, and it puts pressure on our competitors to try to be as innovative as we've been. It's right now it's only the Experian report.
How far back does the rent reporting go if a new user is signing up for Boost? Does it start when they sign up, or can it go back to all the rental history?
Okay. Yeah, so two different issues. Boost does not include rent payment, although you can have rent payment reported. So if you search Experian rent payment, you can actually talk to your landlord. They can report your positive rent payments to Experian and would start that going forward, whether they have one unit in a house or they have a 10,000 unit complex and it's a big management company. They can actually report that information. Talk to your landlord about that and see if they'll report that for you. So that's separate from Boost. With Boost, we will go back 24 months with utility payments and cell phone payments. So, and any other data that's included in the Boost. So cable television bills, for example. So we'll go back 2 years.
It's 3 o'clock, Rita.
Rod, you have a few more minutes? You have more
Sure.
questions
Yeah,
on
actually,
that?
I do.
Okay.
Go ahead, Vonda.
Let me get my readers to kind of focus in here. Let's see. I work with women who are divorced or separated. I think this will be extremely helpful for them. Are there other things divorced women can do to improve their score, or are there other things divorced women should look out for regarding their credit?
And we agree. And that's one of the groups that we've looked at. And divorced women clearly are still more adversely affected than men financially through divorce, and that hasn't changed, unfortunately. And Boost, we think, will help because it lets them add the bills that they have that they're paying and to help rebuild that history. So yes, I agree. I think it will be very helpful for divorced women in particular. Rent payment also is a good resource for a newly single person. So check into that. Beyond that, it starts getting into the more traditional kinds of things. So maybe having a secured account with a bank or credit union, having a small credit card, that you then use periodically to make a small purchase and make the payment in full. So you're not carrying debt, but you're demonstrating that positive history, and it can help in time build that report back up and increase your scores.
Okay, thank you. If you disagree with how the utilities are reporting, is the dispute process the same as with creditors?
With Boost, no, because you're actually the reporter. So you would say, take it off. You just tell us stop reporting. And that's kind of the cool thing about the way Boost works. When you get the score up front and then the score when you've boosted, if you see a score and it drops and you're not happy with that, you can just say, let's not do this. For most people, it's the other way around, and it helps increase their scores. If you see a no score change, which happens from time to time, you might want to continue for a while, because as that history builds, you'll probably see your score start to come up a bit too. But in terms of disputes, if you don't like the effect it's having, you just tell us, let's not do this anymore, and we'll stop.
Rod, a lot of people are asking about Credit Sesame and Credit Karma and the differences. And so how do they compare? And can you just say a few words on that?
Yeah, they are competitors to Experian in terms of our consumer direct service. They think about this. I mean, I can't speak to them too much specifically. They provide a service. TransUnion, Equifax are partners with Credit Karma. We do our own services. So, if the thing to understand with anything like that is that they're making an offer, and the currency exchanges your information. So you're going to get offers, and it might be beneficial. We have a similar product. It's called a credit match. So if you're looking for a credit card, what we do is you give us information about what you're looking for, and we'll give you the top matches based on what you tell us. Ours, can't speak to others, but ours is driven by what you tell us, not based on a finder's fee that the lender would pay. So maybe do some research around what that is. So are you really getting the best offers for you, or are you getting something that's based on how much the service you're working with is getting paid by that lender?
I think that's a really important piece. Thank you for that. I think most people don't understand that. And if your identity was stolen and you really are just next to impossible to make sense out of that, nobody's helping you. How do you handle that?
It's difficult. You can come to the credit reporting companies, and we'll help if you file a police report, which you can do. I did that with our local police department. I live in a little town in Texas, and I was kind of disappointed because I went to the police office, the police department, and thought, I get to give them a speech about how they have to do a fraud report. And I walked in and said, I've been a victim of identity theft. The officer looked at me and said, let me get the form. I'll be right with you. I don't know. Stole my thunder. I like to talk a lot, and I didn't get to talk at all. So he knows. So they know, and fill out that police report. You can upload that to us, and we can begin to remove the fraudulent accounts you dispute, and we do it proactively. So we can help from that perspective. Otherwise, it's about working directly with the lenders. Notify your lenders that you are a victim. Provide that police report. They'll probably ask for affidavits to verify that you are a victim. Notify if you get letters or emails from, not so much emails, but especially because it could be phishing, but if you get letters or collection inquiries from banks that you don't recognize or accounts, notify them that you're a victim, and provide the documentation they request as well. It can be a challenge, and like I said, it's not just credit, and that's where we sit, but it's beyond credit. It's much harder. There isn't sort of that central, kind of organizational process that you can follow. The IRS will issue a fraud number for you to use when you submit your tax returns. Get that number and have it every year. So then it's a matter of kind of protecting yourself. Use if there's a breach, or if you subscribe to a monitoring service, take advantage of it. especially if you can get it free, but also subscribe if you're really concerned about it or been a victim, so that you get alerted to use of your information on the dark web and some of those things. People say, well, is that real? And actually it is. So it's a challenge, and there's no one quick, easy answer.
Well, I want to thank you so much. We have a lot of people that stayed with us, and I hope you'll come back again next year because you are a great teacher and we appreciate your time. I appreciate everyone for joining us today, and I hope you'll come back next month for our next webinar. And have a beautiful rest of the day, everybody. Rod, thanks so much.
Rita, thank you. I'm glad to be here. I have to wait a whole year?
Okay, can we have you back sooner?
Sure. I'm happy to. Thank you all so much for the great questions, too.
All right, have a beautiful rest of the day, everybody. Bye now.